Good morning, everybody. I'm Sam, and I'm CEO and co-founder of Akur8. And really happy to host this session today about unlocking the potential of pricing analytics and underwriting innovation. So if we look at insurance risk, everybody talks about inflation, increase of frequency, severity of climatic events, new customer behavior post-COVID, rise of EVs. So no doubt that insurance risks are evolving in an unprecedented way, and of course impacting a lot the insurance industry. So how can insurance companies adapt and evolve to those fast-changing trends? This is the question that we're going to try to answer today. And to do so, we invited some of the most recognized industry experts coming from companies like Hippo, Next, Guidewire. But to kick off this session, let me invite Claudine Modlin for a keynote. So Claudine is SVP State Insurance Product Management at OnStar. But beyond this, she is one of the top insurance pricing gurus. So we are very pleased to have Claudine with us today. Welcome.
Thank you, and good morning. When Sam first invited me to share the stage here at ITC, I was honored, I was excited, and honestly, maybe a bit intimidated, right? What do you talk about in front of a room full of market leaders, market disruptors, and enablers? So as I tried to hone in on topics that I thought would be of interest to the crowd, I decided to be guided by my own personal curiosity and my own passions. So I landed on two topics. First, my curiosity. How is it that some insurers are managing better than others in this crazy current environment? And secondly, maybe this is a passion of mine, how do we think about selling an insurance product alongside or in conjunction with other non-insurance products? So I know we call that embedded, and that's a big buzzword at ITC, but I often just think of it as selling insurance in a different environment. So let's start with my curiosity. The current market environment, I think all of us would say it's a hard market. Some of us in this room might call it a bloodbath. If I even just focus on my own line of business where I spend my day-to-day time, which is private passenger auto, this is how I would describe the last few years. 2020, the pandemic starts. Literally, overnight, people stopped driving. But those who are still driving appear to be driving like bats out of hell. A couple of years later, as the pandemic thankfully eases, we see people return to driving, perhaps with some slightly different driving behaviors. And just as that happens, major supply chain crisis, we see the cost to repair and replace cars skyrocket, as well as other costs going up with inflation, such as medical costs. Many carriers slow to react. So what do we see as a result? Loss ratios in the 80s, the 90s, combined ratios well in excess of 100. And the response from the industry, double-digit rate increases, tightening of underwriting appetite, massive pullbacks in advertising spend, some companies shutting off new business altogether and exiting markets, particularly where regulators were also a bit slow to respond to this new environment. And amidst this financial chaos, we in the auto insurance industry are facing a very different landscape of the vehicles themselves. Understanding electric vehicles, advanced driver assistance systems, and coming down the pike, AVs. So I'd call that chaos. But there are cases of carriers that are surviving, if not thriving, in this level of chaos. I don't know, has anyone in the room read Progressive's third quarter earnings that just came out yesterday? So I think they posted, so their competitors are combined ratios 115, 116, Progressive's at about a 97 right now, so about 1.5 points above where they'd like to be. But their growth in the first 3 quarters of this year compared to last year, $8 billion. $8 billion, if you created a company with that revenue, would be the 8th largest auto insurance company in the United States. That's mind-boggling. Now, I'm not here to talk about Progressive, but I am here to talk about what I think high-performing companies are at least very good at. Firstly, they have a robust understanding of how their products are performing in market. And second, they react quickly. They have a culture of reacting quickly and continuously. So I want to break that down, understanding how your products are performing. For a lot of companies, we get our understanding of product performance through what I've always called a management pack. This thing that arrives in your email once a month, once a quarter, might be 100 pages long with all kinds of numbers in it. What are the common complaints of those? Too many pages, too many metrics. Do I really need 6 different flavors of loss ratio? A lot of companies or teams are questioning the accuracy of these reports. They're not delivered frequently enough, or they're not delivered timely enough, and perhaps most importantly, they're static. They don't tell me what's driving these results, right? And of course I need to solve that, and that often takes more people and more time than I have. I would argue that high performers are following a more modern approach to product performance. And that starts, no doubt, with a non-trivial investment in the data platform. So what I mean by a data platform, a centralized repository of disparate data. So yes, policy and claims data, but also customer attributes, telematics, billing, call center logs, et cetera. Carefully warehoused, carefully curated or transformed, and generally in a cloud environment, again, modern. Now with that data platform, data dictionaries would be published, so everyone in the enterprise knows what these data fields are. Data validation, anomaly detection would be automated and just generally best practice part of data delivery. And yes, I would think senior leadership still gets a management pack, but it's thinner and it only contains those key performance indicators that that company decides are most important to them. And it would contain leading indicators and lagging indicators, provided in a timely manner in the right reporting frequency. And I can't emphasize enough about leading indicators. Those carriers who could see that claims frequency was going to rise because mileage was on the rise. Those who see that attorney representation is on the rise that will eventually manifest in a severity influence. So that's what senior leadership is getting. What is the rest of the enterprise getting? I call it full democratization of data, right? So they get self-service capabilities to query this data warehouse. And that includes a couple things. One, interactive business intelligence tools that allow you to drill down, double click, whatever cliche you like, to understand what's driving the experience with some good slick visualization to go along with it. So what might BI tools help you learn? I can think of examples in my career of, oh, there's a loss ratio problem over here, and we learn it's influenced by agents or customers who are overriding the customer prefill. Or, oh, we have a problem over here with customers not paying their premium, and lo and behold, it's those customers who bound on a prepaid credit card. This is what I mean by drilling down into what these drivers are of performance issues. Secondly, in terms of self-service capabilities, we need to serve those doing more advanced analytics, or data scientists, or actuaries. So they need a modeling toolkit that will enable them to build or refresh sophisticated models in pricing, in underwriting, in claims, and in marketing, and that those models can be reusable for other use cases. Now, the other speakers this morning will talk about Akur8 as a modeling toolkit to serve those needs. So when employees trust the data, and they have a consistent self-service approach to interrogate it, I think what you'll find is cross-functional teams will come together, they'll share their insights on what is driving performance, and they'll generate solutions. But before I talk about solutions, I want to challenge you to think about what's moving with generative AI. You knew I was going to say it, right? Has anybody been to a session today that didn't talk about generative AI? I'm not going to talk about generative AI and how it helps contact centers and how it helps coding and things like that, but management reporting. I want you to envision a day where you wake up and you're not checking your email for that management report, but you're putting in a prompt that says, how did the company perform yesterday? What was different? What trends do you see forming? I don't think that world is that far off. Okay? And it's easy to think that with the advent of generative AI, we all leapfrog into being great monitors of performance. However, if there are shortcomings in your data platform, I would argue that that could actually widen the gap between the high performers and the average performers. Okay, let's talk about solutions. How is it that these companies react quickly and react continuously? So if high performers can identify granular root causes to what is driving performance to be off plan, they have to have deployment capabilities that are just as granular or surgical, I might call it. So that requires systems architecture that is configurable. So whether your solution is rate, which is probably pretty configurable in most insurance companies' systems. But when you look at non-rate, the ability to control underwriting appetite, underwriting process, channel management, marketing allocations, the ability to control those types of things in the customer segment and the geography that need it, that's configurable systems architecture. High performers also invest in ways to ease deployment complexity. Now, I don't run an analytics team, I run a business team, and we're the ones coming up with all these remedies to solve issues or opportunities. And what my team needs are no-code or low-code solutions so that my business team can deploy some of these non-rate or rate solutions without having to stand in a queue to wait for a technologist to do it. That's what I mean by easing deployment complexity. High performers also invest in technology that allows them to deploy complex models. So if you build a complex model, you don't want anyone having to tell you, well, you need to simplify it to a set of rules or to something that fits in a table-based structure. No, if you want to run customer lifetime value at point of quote, you need systems architecture that can deploy a complex model in its native form. Finally, I would say high performers are savvy at forecasting the impact of their remedies. So I'm talking about scenario testing frameworks where you say, this is what the current environment looks like, our current policies in force. If we were to take this remedy, rate, non-rate, whatever it might be, here's how it will change the mix of business. Here's how it will improve profit and volume. Because if you can do those types of scenario testing frameworks, and I think one of our subsequent speakers will talk about this, you can gain alignment with your management partners, right? Your senior leadership. And you also have a framework to monitor against when this remedy hits the market, and it continues the conversation. So to sum this up, my curiosity of why some carriers are surviving, if not thriving, in today's turbulent environment, they really understand how their products are performing in market. They've invested in modern data warehousing. They've democratized the data. I love that word. They've democratized the data, and they've given the enterprise a toolkit of powerful self-serve ways to interrogate it. Those data interrogations then lead to surgical remedies that they're able to bring to market because they've invested in deployment technology and commitments to forecasting those changes. So what it creates is this beautiful virtuous cycle that's also supported by culture. A culture that says identify it, change it, monitor it, and adjust it if you have to, right? Not big step changes of drastic actions, but continuous monitoring like that. And again, it's only going to get more interesting as we approach the era of generative AI. So now I want to switch gears away from my curiosity onto my passion, which happens to be how do we think about insurance product design when you're trying to sell insurance alongside some non-insurance products and services. So years ago, as a baby actuary, I had the opportunity to work in Japan as that auto insurance market was deregulating. So I was a newly minted actuary. I was asked to take my bundle of pricing skills and carry it to this market to introduce rate segmentation that the market had never seen. So I was very excited to do that, and I had lots of ideas, but I had to understand the environment. What data did they have access to? Could the rating engine handle what I had in mind? What conversations did management want to have about this? How would customers feel about being asked questions on the application that they'd never been asked before? So whether you're thinking about insurance being sold on a widget maker's platform or insurance being sold in a foreign country, there are similarities. You have to understand the new environment. So what kind of non-insurance products are we talking about? Who's ever bought an airline ticket and been asked, do you want travel insurance? Or you bought an electronic device on Amazon and said, do you want a warranty protection product with that? That's what we're talking about. Well, we're moving into an era where you may buy a car or get a mortgage on your home and be asked, do you want car insurance within that same environment? Or do you want homeowners insurance? Why are these partnerships appealing? What does the insurer want? The insurer wants access to a large pool of customers, here's the rub, at a low cost of customer acquisition. That's what makes these deals appealing. The partner wants revenue, diversified revenue, something that's a bit different than their core product, but they also want to provide value to their customer. They want to give their customers something that they can't get off the street, so to speak. And they want that to result in greater brand loyalty and stickiness. Sounds pretty easy. We should be able to get these two partners working together, right? But think about their differing perspectives. The insurer may have an existing auto or home product, small business, whatever it might be, that they intend to lift and shift into the new environment. Because why not? The partner, on the other hand, may not understand how that existing product was underwritten, was priced, what the regulatory environment is that it exists in. And they may have a very different vision of how they want the insurance sales process to go down. Fast, efficient, streamlined. One question quote, give my customers a discount, honor my brand standards. And they might not even have an appetite to follow an MVP approach, in other words, to get there over time. So now things are starting to sound a little more complicated. This is a dance, this is a negotiation. And there's a lot of education and empathy that needs to happen among both of these partners. The insurer in particular will want to educate the partner about some of the constraints within insurance, but also show a willingness and an open-mindedness to examine their existing insurance product, the contract, the underwriting, the pricing, for what could change to better work in the new environment. So for starters, think about having to estimate the value of every underwriting variable and every pricing variable that you use today. What's the benefit that it brings? What's the cost that it presents? Do you really need marital status? How much does good student really add to your ability to assess risk or your ability to attract risk? Because every question that you ask, every screen that you put in front of this new customer could jeopardize the insurance sale, if not the broader sale. And I think this begs economic questions of, if you had slightly less disciplined underwriting or pricing, could that higher loss ratio be justified with a lower or better expense ratio or a stickier book of business? I would also say explore with the partner what data they have access to, something that helps you either understand the customer's needs better or understand how to assess that risk better. So a few years ago, I was working with a partner that said, yeah, in our customer base, we think we have a pretty good idea of who drives for Uber or Lyft. So you're the auto insurer thinking, whoa, what would I do with that information, right? You also want to look at how different is this customer base relative to your other channels. Does it offer reduced fraud potential? Does there better retention? Are there opportunities for reduced claims cost? And if you were to find those things, would you embed that in terms of a pricing discount to the customer or perhaps some other perk, broader coverage? So there's a lot that needs to be done in product design before technologists even begin to program this on the partner's tech platform. And eventually the product is up and running and quotes are being generated and being sold, and now there's opportunities to optimize that sales process. It's a lot of hard work. I haven't even talked about working with the business development folks and the finance folks to create a financial terms that make sense. Remember, these should generate lower cost of customer acquisition. And what you need to do to ensure that these parties are always aligned in their goals. Are you both aligned around growth? Are you both aligned around profitable growth? Are you both aligned around a great customer experience that generates profitable growth? I know these things sound basic, but they can get out of whack. Right? So I love this type of work because I think it forces us to rethink how we design and how we deliver insurance products, challenges our older paradigms, and it encourages us to find new ways to leverage data, analytics, and technology in ways that honestly I think would help even more traditional forms of insurance distribution. So thank you. Thank you for letting me share with you this morning my curiosity of what enables top performers to stay on top, things that I think we can all challenge ourselves. I work for a startup, so I want to build this sucker with best practices from the get-go. So what are best practices? And thank you for letting me share my passion for rethinking product design in foreign environments. So enjoy the rest of your day, and I'll hand it over to Brune.
Thanks a lot. Thank you so much, Claudine, for all these elements. So I will spend a couple of minutes to introduce Akur8. So I'm Brune de Linares. I'm Chief Client Officer and co-founder of Akur8. And let me introduce a bit Akur8 as a company and what we do. So Akur8 is a company founded 5 years ago. Now we have more than 100 employees working at Akur8 with a very tech DNA. So still a lot of people working on the product, actuaries, data scientists, developers working on the product. And so we are working with more than 100 customers globally in different countries, on all non-life insurance product, dedicated platform on pricing. So let me just come back on the couple of references that we have. So of course, we work with big players globally in the P&C retail and commercial area, so AXA, Generali, but also Japanese players like Tokio Marine, MSNAD. But we work also on some commercial and specialty line of product with Tokio Marine North America Services, for example, or with Insurtech like Next and Hippo that will come on stage for use cases with us. So now, if I have to come back on what we are doing. So the mission that we have is really to empower actuaries to take better decisions faster. And I think that it's completely aligned with what Claudine just shared before. So there is a cost to the status quo. You have to react, you have to give insight, and you have to focus your people on value-added tasks. So our mission is really to give access to a solution that could empower the actuaries to take better decisions faster. And how we do that? We do that with a platform that embeds what we name transparent AI. This is an highly regulated use case. You have to be completely transparent. You have to comply with the regulation to avoid adverse selection and really understand the model that you create. But you have to be more and more sophisticated also and take the decision that makes sense for your business. Do you want to simplify your rating structure? Do you want to simplify for the of performance, the model that you use, or do you want to complexify, and what is the value that you will get out of the complexity that we bring in the process? And so really what we have is dedicated algorithm that will bring speed, automation, ability to explore large data sets, but keep transparency, keep control, and give the actuaries the right to decide and take some decision on the model that they create. So I will not come back in details on the market and technological changes that you mentioned, Claudine. We all know that the industry, the context is not the easiest one, and that we have to react as fast as possible. Competition is moving. So insurance companies are investing more and more on data, on technology, on sophistication, and bringing sophistication, bringing advanced capabilities in that process could lead to an improvement of the profitability of the product that you have. So this is really like market trend we see. And again, you cannot just wait and see because it will have a cost for the insurance company. And it's not so easy to bring sophistication. It's not like, let's do something more complex. As mentioned, we to have time, we need to have the people, the talents to do that. We need to have the collaboration to avoid the silos that you could have in your organization. You need to have the governance to explore the data. So it's a complex challenge that we try to tackle with Akur8. And the value that we bring with the solution is really speed. So to price 10x faster, to build your rates as often as you want. Then you can decide to put them in production or not. But at least you have the information to take a decision. Price for impact. So have better performance, better understanding on the impact of your decision. So you mentioned, sometimes that makes sense to have fast quote process. So just 2 or 3 questions, and it's enough predictive to have the right prediction of the cost of your customer. Sometimes you want to have something more complex. You want to include external data, but you need to price for impact for the business. But you have also to price with confidence, with transparency, control on what you are doing. And this is really the combination of the 3 elements that we bring in the software as a service platform that we provide at Akur8. So now I will let Sam maybe introduce the use cases that we will present to you today. So you have like concrete feedback on how you could leverage Akur8 to improve the pricing process.
Yeah, thank you very much, Brune. So indeed, now it's our pleasure to welcome some clients on stage. And the discussion will be led by Tom Holmes, who is our leader of actuarial science for North America. And we will have the opportunity to discuss some very interesting use cases with both Hippo and Next. So welcome, Tom.
Thank you, Sam. I'm gonna move forward. There we go. Excellent. So I am Tom Holmes. I'm the head of actuarial data science for the United States for Akur8, and I work directly with the users of Akur8 in various capacities. So we're going to walk through some of these case studies, some things that have already been done with Akur8, those lagging indicators. Maybe we have a lot of the leading indicators up on the stage of what you can do. So let's go over what has already been done. So I'm going to invite Jake Falmagne up to the stage. He is the senior VP, a VP of Actuarial Pricing and Data Science at Hippo Insurance, is a fellow of the CAS. And while we get started, you can read all of the rest of his bio.
Making me seem better than I am, Tom, but thank you. So at Hippo, we're a home insurance company, and we have a by-peril pricing program. So what it means is we want to build models for each peril, build it up from the ground. So that's your fire, wind, hail, water, and so forth. And then within those, we like to build our frequency and severity models separately. So you're talking 8 perils, frequency, severity. That's 16 models that we're trying to build up and maintain, with a pretty small team. At the same time that we're doing this, we're also trying to test a large amount of predictors. And so this is where innovation comes in. So we assembled a large data set, first-party data, open source data, or third-party vendor data that comes at some cost, and you have to evaluate whether that cost is worth it. So we amassed a data set of hundreds of variables, and again, are approaching this with a very small team. Many variables, not enough time is kind of the setup.
Yeah, and so I'm not sure if any of you have met a data provider at ITC. There's probably at least one. So when you bring that back, you find 1, 2, 3, 4, 5, 10 that are potentially useful, and then you have to go in and actually analyze, do that ROI, say, is it worth making this non-trivial investment in this particular data? Is this worth it for my particular company, for my particular use case? And so let's dive into how Hippo tackled that problem that some of you might be facing right now.
So step one was we threw everything at the wall. And so, once you load your data in Akur8, and of course, you still do have to do your data prep, and that step doesn't go away in modeling. But once you get it in here, more or less at a click of the button, you fire off a bunch of models. This is cloud-based. And so, on the page here is the example of a grid search output that you might see for one of the 16 models. So let's say this is our hail frequency model. So each dot that you see on this page is a fully functional, fully automated hail frequency model that was built up with, again, pretty much a click of a button. And within each of these, all these variations of our big data set of hundreds of predictors had been tested in kind of optimal combinations. And so you can see on the left, from 5 variable models were built up to 40 variable models, and there's probably 30 dots on the page, so each one of those is again, a fully functional model. That's really powerful. So, to be able to leverage computing power to algorithmically find the optimal combination of all your variables is really powerful.
Yeah, and to view this on all of your different models, then maybe aggregate your models together, figure out which ones are the most powerful in aggregate across all of your perils. It's just a really good tool to get you all the way to see what this ROA is kind of at a glance, because you can very quickly make these decisions, move on, and evaluate other courses of action.
Sorry, still on the last slide, I guess. But 30 models, were fit, and I guess just within each of those models, an important piece to think about is that your continuous variables, they've been binned for you. Your categorical variables are grouped kind of in an automated way, and so modelers or non-modelers in the room, that process typically is very time intensive for modeling. So to be able to kind of get this off the ground and bring it all together is huge. And so here up the y-axis, you're looking for that saturation point of performance. So I might hone in here on the 26 variable models because as you're going to add complexity to the right, you can see that the performance, it just isn't really there. So now you double click in and start to evaluate your models. And so this graphic shows for our 26 variable, we'll call it the Hail model. These are all your variables ranked by feature importance. So by flipping through these very quickly, I can get a feel for when, which of my variables of interest are kind of popping. Are they at the top, high value? Are they at the bottom, or have they not even shown up where I thought they would?
Yeah, and so what's really important about these models is that they are completely transparent. You can dive in, see the exact effect of every single variable, because the best model, like technically, might not make any actuarial sense. You need to make sure that the inner workings of this model are really behaving the way that you want it to. You want to make sure that everything inside is something that you would be fine filing with all of the departments of insurance, showing to your internal stakeholders, getting buy-in. So this transparent approach is really, really important to be able to explain and incorporate the actuarial judgment during the modeling building process. So you're going very quickly from the data to applying that judgment.
So then we got to the point where it was time to make some decisions. So in the first step, we threw everything into the pool and let the models decide for us. Now we need to refine. And so something you might see typically is that variables compete for signal. And so when you're doing a cost-benefit analysis on variables, you may need some further investigation. So the example I'll use on a hail frequency model is, there's some free, publicly available weather data, NOAA data out there that you could assemble. That might be predictive of hail. There's also plenty of vendors selling a prepackaged hail score models, and you might be interested in testing. Of course, that comes at a cost. Is that worth it? And so you run through these, and maybe the initial output is telling you that the optimal model is the one with the paid variable that's popping to the top. It's important. That's great. You have to dig in because we were told that the hail score is better, but we don't actually know by how much yet. And what we're really trying to get at is a marginal cost. So what we did next is use Akur8 to fit variations of these models. So pull out unfit the paid variable, put your NOAA data in, and allow, again, a grid search so other combinations of variables can try to explain that signal. And then you can use these comparative tools, and you might see that, hey, I'm getting to 99% of the performance of the original model. And then you can start to make some decisions because if you're getting 99% of the way there, you're going with the variable that you have in hand.
Yeah, and analysis is not a straight line. You never go straight from your start to your end. You're branching, and you need to very quickly do all of this in parallel. So Akur8's cloud-based solution allows you to kick off a bunch of models, prune your analysis where it's not bearing fruit, really accelerate, branch more where it is, and really just do all of this all at the same time, explore many different ways forward.
Yeah, so after making our variable decisions on the fly, the beauty of it is our modelers could pick up, on the model branches that, we chose and drive those to completion, while in parallel, we, worked out the discussions internally or, went forward with different vendors. So this ability to make, tons of copies and test at scale really gave us optionality. We did take advantage of this. I think at one point we were running so many models, you said we became kind of a thing on the engineering Slack channel at Akur8 because Hippo was taking up so much space. But to summarize, we were really using this to go from 0 to 80, faster than we could with any other tool. And it empowered a small team of modelers to do a ton in parallel that really couldn't have been done, without it.
Yeah, and that 0 to 80 allows you to prioritize exactly what is most important to your business. See if this is where you want to spend time, if you want to spend time elsewhere. And every company is unique in that respect. And so speaking of other companies, let's thank Jake for his time, and let's invite Phil Natoli up to the stage, Chief Actuary at Next. Again, Phil has a very expansive bio that I'm going to let you read. He's a very excellent chief actuary that I've had a chance to work with.
Yeah, well, thanks for having me, Thomas.
Yeah. And there's also some news that I heard from Next recently, if you could speak to that.
Happy to share. I mean, many of you have already seen the news pop up in various news articles, but we recently closed a round of $265 million, coupled with strategic partnerships with 2 giants in the industry, Allstate and Allianz. So exciting times for us, and exciting to see what's to come and what we build out of that partnership.
Excellent.
So I think what I'll start with is a brief introduction of Next Insurance and who we are, and further go into how we began our engagement with Akur8, the benefits we've seen with the platform, and finally where we intend to go next with our usage of the platform. So Next is a digital-first insurance company that was built for one specific reason, and is to follow our mission to help entrepreneurs thrive. We're dedicated to the small business segment. It's a historically underserved segment, and we're passionate about serving and growing within this customer base. I think the next slide here shows one of our pictures here, and moving on to the next one, I want to talk a little bit about the competitive advantages that we feel will lead us to over time grow further in this segment. We offer a simple, affordable, and tailored user purchase experience that enables our customers who are not insurance experts to come in to our website and purchase insurance directly and understand the products that they're purchasing. We further offer or really utilize our superior digital underwriting platform to better price risks and better understand our customers' risks, both to better serve them, but also to lead our book of business to profitability. And finally, we offer an omni-channel distribution platform. We're proud of the direct experience we can offer to our customers, but we want to be where any small business customer is, and many customers still rely heavily upon their independent agent partners, and we want to be there for those customers that value that experience. And finally, we have a large part of our business that is sold through partnerships with payroll providers. So really 3 channels where we can meet our customer and offer our products. All of this is built on top of our proprietary technology platform, built from scratch to service really these 3 pillars of our strategy. Transitioning a little bit to how we became engaged with Akur8, one of the questions that we always ask ourselves before engaging with a vendor is, can we build this ourselves, or should we buy this? We have a team of talented software engineers that can build capabilities, and we're always asking ourselves this question. But as we went through the piloting process and demoing process, it became clear to us that a buy decision was the right one in this case. So what did we see as through that process? The benefits of the modeling platform were very clear: transparency, automated selections, auditability, and understandability for management. But interestingly, as we began our engagement and went through the process, our needs pivoted a little bit to a different use case, which I'll talk about in a second here.
Yeah, and this environment here is exactly what Claudine was talking about building out a system that can react quickly. There's no time to wait. So we're very honored to be welcomed into a robust ecosystem like this that can react so fast.
So as actuaries, we could not wait to get our hands on the modeling capabilities that the platform offered, but we had a more immediate need in the earlier part of the year to really demonstrate in a strong way that the actions we were taking on a pricing and underwriting side were leading us towards profitability. And most importantly, we needed to gain alignment with our largest reinsurance partner and make that case clear. I think I wanted to pause here because I know you told me a great joke earlier. I'd love to hear that from you.
Yeah, so when you're convincing actuaries of anything, it's very hard because we have our own methodologies. We've used those for so many years. They're tried and true. They'll get us through most anything. And so what this always reminds me of is basically the one actuarial joke I know, which is, how many actuaries does it take to screw in a light bulb? And the answer is that I have absolutely no idea, but I would wonder exactly how many it took last year. And that would be my answer this time. We don't really like that particular change. We like to follow on what's happening before. So if you're going to convince an actuary about innovation, you need to have a very, very clear story, and you need to have a very, very good reason why you're changing things and what results you're going to get from this change.
So I always appreciate a good joke about relying on historical data, but in this case, that's not really enough for a reinsurer who really needs to feel confidence that in the future we'll be pricing and steering our book toward our target loss ratios. So what we needed to do was model and stage all of the changes that we've made over the course of the last 6 months together in a combined way through a transparent platform to demonstrate that not only that these actions were working in concert with each other, but on the combined level would be enough to bring us to our profitable targets. And we did just that. So through our partnership with our reinsurers, we built out these models and actually collaborated directly with our counterparts on the actuarial side of the reinsurance company to understand and build this project out.
Yeah, and very often the biggest barrier to innovation is not having a method of innovation, it is communicating it. And that communication is just completely essential, especially as we're moving forward in this environment.
So I want to talk a little bit about how the working relationship went with Akur8 as we built out these projects, because I think it's worth mentioning. So when we went through the demo and piloting process, we knew about the ongoing customer support and the ability to chat with not just a technology support team member, but also an actuarial data scientist like yourself if we had a technical actuarial question. And the rapid response, that was clear, and we valued that throughout the onboarding process. But what we didn't expect was the team proactively setting up meetings between Next and our reinsurance partner to build an understanding of how the platform worked and brainstorm ways we could model certain changes we've made to fit it into the platform. And what we also didn't expect was working sessions and really workshops with the product team to understand the development roadmap with Akur8 and the future state, and we actually were able to advise on changes we thought would be helpful to see in the platform.
Yeah, at Akur8, we fully realized that once a product is done, it is now irrelevant. So like once you say your product is complete, well, guess what? Next week happens and something changes. So we're constantly developing, constantly changing, and this feedback loop that I have with all the customers allows me to see from their perspective, how are things changing? What do we need to do to make sure that we change with the environment? And so this continuous feedback loop is good for both companies, where you share your needs, we share what we can do, and we work together to grow together.
So I didn't mention this on the prior slide, but it's really a callback to what Claudine spoke about earlier. This is a challenging time for many carriers to reach their profitability goals. We have high inflationary trends, and we have a lot of changing dynamic factors, both in the world. We're just coming out of the pandemic, the pandemic changes, and the ability and need to react quickly to changes in the market environment is really important, and further emphasize the need to gain alignment with our reinsurance partners who, not only are they dealing with a fairly limited set of data that we have here at Next. We're only 6 years in, and for a company that writes liability insurance, it's 6 years still is as early on in the tail as many of you know. So I want to talk a little bit now about what's next with Akur8. We didn't get a chance to put this into the presentation, but we're excited to say that we did build our first model within the risk platform for one of our products, and are working now to gain alignment with key stakeholders internally to push that out into production over the next 6 months. So we're well down the path of using the platform for its really strong purpose, the risk modeling. And that work was really built on top of the work we did over the last summer with building out the scenario modeling. Just kind of concluding here, what we saw in the value initially through the piloting process, we're getting to that now, and we're very excited to deploy that through all the lines of business that we sell to our customer base.
Thank you, Phil. Let's welcome Sam back to the stage.
So thank you very much, Tom. Thank you, Phil. Thank you, Jake, for those user testimonial. And to close this session, let me welcome Roger, that is SVP General Manager for Guidewire Analytics, so that we can have a quick chat for the last 5 minutes. So please have a seat, Roger. And so we're not going to lose time. I will let you introduce briefly yourself.
So I'm Roger Arneman. I've been doing analytics and insurance my entire career, so for 25 years. And I'm the GM for Guidewire Analytics. So what that means is I run all of our analytics businesses. We build our own solutions, we partner, we invest, we also acquire. And in short, our mission really is to make the world more insurable.
All right. We've been talking a lot about AI, about technology during this discussion. So if you look at the quite broad set of Guidewire customer, how would you say they leverage those new technologies to stay competitive?
So for us, as a core system provider, about 25% of the world's premium goes through our systems. And so it's really important that we serve as a backbone. And when we talk to customers, most people want 4 things. They want the best models. They want choice in models or offerings. They want a fast time to value, and they want good ROI. And so what we've determined is the best way to actually deliver that isn't to try and build everything ourselves, but ultimately to allow choice for customers. And so one of the slogans that we use is to take a system of record, which we are as a core system, and turn it into a system of insight. And so that's something that we're really excited to do. That's why we're excited about our partnership with you and the investment that we also made, because we think that you're the leader in the space. And that brings powerful capabilities to our customers.
Thank you. Thank you so much, Roger. And thank you for your trust. Indeed, Guidewire invested recently into Akur8, and we are really proud of this extended partnership that we are building together. And beyond this partnership, Guidewire has been investing a lot in the last week, months, years into pricing and developing new rating capabilities on the cloud. So why did it become like an area of focus for you?
So for me, I've always been super passionate about rating and pricing. My father gave me some good advice, which is you don't make money when you sell a house, you make money when you buy a house, right? And so being smart about what you buy and getting the value up front, it's the same in insurance, right? We make money or lose money based on how we price risk. And so to me, that's the beginning of the chain. And so we've sort of done a different set of strategies for build, partner, buy. For build, we have our own rating engine that a lot of large insurers use. For buy, we acquired Hazard Hub 2 years ago, which we feel is incredibly predictive information coming to things like hail scores to drive property pricing. And then the third thing is to partner and invest with people who we believe are leaders like Akur8. And I think when we do that together, that helps us really achieve that mission to bring our system of record into a system of insight.
Okay, thank you. Thank you so much, Roger. And we've been talking a lot during this session on the current context and how to navigate those changes. If you, maybe for this last question, if we are trying to project ourselves in 5 years, what do you think are the initiatives that like top insurers will have taken to remain competitive and to remain at the top?
So I think the first thing is much more granularity, right? I think when we look at how pricing is actually done, there's huge opportunity to segment in a much more refined way. So the first one I would say is granularity. Second is being dynamic, right? I think there's a lot of static nature to how we price. We stick with prices for a long time. So to price more proactively, we were talking a little bit about identifying trends before they happen. So I think that dynamic nature is really important. And the last thing I would say is I think I'm a firm believer in risk mitigation, right? And I would actually love it if all insurance companies were called risk mitigation companies. And we partnered with customers and small businesses to really help understand and mitigate the risk in the first place, and then have insurance as the backstop for the residual risk that you can't mitigate. And I think one of the ways that we actually get there is through pricing, right? So if we can offer discounts to incent the right behavior, ultimately we're not only protecting customers and businesses, but we're also actually reducing risk in the world. And so I think pricing is the way that you get there.
Perfect. So I think it's an excellent conclusion for this session. We still have like 5 seconds, so I wanted to thank all of you. Unfortunately, we cannot take any question, but please feel free to pass by our booth if you want to continue the discussion. There has been lots of elements shared today and probably lots of questions to ask. So we are fully available on the booth or don't hesitate to reach out on LinkedIn with any of the speakers today. I thanks once again as well our speakers that have been really amazing. So thank you very much for your attention.